Hi, I'm Urmi Desai, editor of MoveSmartly.com, and this is a Move Smartly show. Today, for our occasional series we call Move Smartly Ideas, I'm going to be leading and moderating a debate/discussion between my co-host, John Pasalis, president and broker of Realosophy Realty here in Toronto, and Daniel Foch, a popular podcast host and a real estate leader here in Toronto as well. Dan Foch is the chief real estate officer at Valery.ca and host of Canada's #1 real estate podcast. As co-founder of the Habistat, the onboard data science platform for TRREB, he helped the real estate industry to become more transparent, using real-time housing market data to inform decision-making for key stakeholders. With over 15 years of experience in the real estate industry, Dan has advised a broad spectrum of real estate market participants from all three levels of government to some of Canada's largest developers. This was a really lively segment, I should say. I really enjoyed it, and I hope you will too. As always, if you enjoy listening and watching to our show and find it informative, please take a moment to leave a positive review wherever you're catching us from, whether it's on YouTube, Apple Podcasts, Spotify, Amazon Music, or Audible, so that more viewers and listeners can find our show. Thank you as always for your support. And now, on to the show. Hello, welcome everyone. So we are here for a special edition of Move Smartly Ideas. It's going to be a discussion, maybe a debate, maybe a brawl between my co-host John Pasalis here in Toronto and market, I guess, industry commentator and also participant Dan Foch. Dan, it's really nice to have you with us.
Yeah, likewise. I'm glad John and I have to finally have this debate. We've had people egging us on. At least I have, John. I don't know about you, but
For
like
sure.
every time we get into it on Twitter, people will DM me the thread and they're like, "When are you guys gonna actually air this out?" And I was like, "I guess we should set it up."
So let's talk about what kicked this all off.
Sure.
Let's go to a tweet about a year ago that John tweeted. I've got it up here on the screen. Canadian homes cannot be affordable for middle income households and a lucrative investment for the rich as well. Governments need to prioritize one or the other. You can't have both. Canada prioritized homes as investments, so middle income households are getting shut out. And that, Dan, is the tweet that had you respond that you'd love to debate this. So,
Yeah.
Dan, I think we'll have to hear from you first. Now, just to set this up for our viewers and our listeners, there is a view, especially in North America, in the industry, but not only the industry, in academia as well, that investment is very critical to building the housing stock that our population needs. In other
Yeah.
words, without the funds that investors bring, we wouldn't be able to bring all the units to completion that we need for our growing population. And the argument is that this investment influx of dollars gets things done in a way that relying on the dollars of just end users, so that's families, individuals, professionals living in the units at the end, alone could not do. And that would result in a mismatch of the stock we need and the stock we end up with. So, Dan, is that roughly your position on the importance of investors in real estate?
Yeah, I would say especially so in the way that Canada's the way like our capital markets are structured. It's not like in the US where you have really strong capital markets where there's investors and fundraising environment, crowdfunding environment, and so you can get debt and equity to fund a project where if I'm a builder, I can build a high-rise project on spec and then do my leasing or sales. In Canada, by and large, because I think a lot of it's we have an oligopolistic banking system, and they all have to adhere by very specific rules on construction financing. We require, the way we raise capital, let's call it, for these projects is through pre-sales. And unfortunately, the long run nature of real estate supply makes it such that it's not really a good product for an end user because an end user could go and commit to buying a high rise condo that's going to be done in 6 years and their life's going to be completely different when it's completed. Similarly with low rise, even though it's a little bit more agile of a supply, you're probably minimum a year or two. And we just saw the market risk that can take place in that 2 year period, like the Mattamy protests that were happening in the GTA where people paid a price and by the time they closed, the interest rate environment and the house price environment that they were expecting to close in was vastly different. And so I just don't know if that's a really friendly environment for end users to be funding new construction homes.
So, and just unpack a couple of things here, Dan. I did see in the news recently a Toronto builder advocating that, for example, in the United States, often projects are fully built and then sold to end users.
Yeah.
And are you, I guess, arguing here in Canada because the banks expect these pre-sales to be part of their analysis of the financing they provide. It's baked right into the system in Canada.
It is, yeah. And so, in the US, the builder's the one taking the absorption risk on the project, whereas in Canada, it's the owners, the investors in this case, if we're assuming that the majority of, and a lot of people say that it's not mostly investors who are buying these, but I disagree with that. I think it is mostly speculators and investors who are buying pre-con. Um, but yeah, like they're the ones realizing the absorption risk now, right? That we have this flood of 40 to 50,000 new units coming online this year, and a completely illiquid condo market, for example, and go down to Austin, Texas, same thing happened, but it's all investors, large scale institutional investors who are the ones bearing the brunt of that risk.
So, John, let's turn to you now. In your latest writing and research and the piece you're calling The Great Sell-Off, the
Mhm.
link is in the show notes here. You're really questioning this idea that investors have to play a central role in our market in Canada, which is a widely held belief. But can you explain why you think that making real estate a lucrative investment for investors doesn't necessarily result in the housing being built that's affordable for end users? Whether
Well,
that's individual workers, professionals, families. You're arguing that somehow their involvement is not creating the affordable stock we need.
well, yeah. I mean, I think if we just go back to the original tweet, I mean, you can't have real estate be a lucrative investment, rapid capital gains and remain affordable. Like houses were affordable before the 2000s up to the 1990s. Home prices didn't appreciate much more than inflation for the most part. They weren't these get rich quick schemes. It's really since the past 2 decades that home prices have really, really skyrocketed, not just Canada and North America and a lot of other countries. And again, I think there's this tension. It can't be a get rich quick scheme and affordable for people who want to buy housing. And I'm specifically talking about owner occupied housing. So, yes, I think there is a tension there. To Dan's point, I mean, he is 100% correct that the market in Canada is built in such a way that investors need to pre-sell units. I think the challenge that I have is that people who advocate in the real estate industry, we advocate for what we think are better outcomes for real estate, for society, for households. And I think when we look at how we built rental housing in Canada for 20 plus years, we didn't build rental housing. We built condos that were bought by investors. And the share that were bought by investors has gradually increased over time. I mean, I haven't sold a lot of pre-con condos, but when I sold a bunch when I first got into the industry 20 years ago, they were actually all end users, right? They were buying late in the construction cycle, so they weren't waiting 6 years, they were waiting 2 years. But the share that has gone to investors has changed, has increased. And with that change, unit sizes have shrunk, right? So I think my point that I'm making is that's not optimal. That is not the right way to build rental housing. Build rental housing and then build purpose-built condominiums for end users, completely different markets. And yes, maybe you advocate for changing the way the capital works for financing new housing construction, so it's not as dependent on pre-sales. And I think this is kind of the tension I have. Yes, in this environment where the government doesn't prioritize rental housing for 30 years and gets out of the business, of course you're going to have investors buying condos, right? And I think my point is that that's not great. We should have been arguing for something different 10 years ago.
So I'm going to just unpack something here, John and Dan together. There's a couple different arguments breaking out here, right? So first, it seems to be the completion argument that if we don't have investors stepping in, by the time, let's say, the next generation of workers, professionals, families come up to buy a home, that stock wouldn't be there for us to buy. On the other hand, there's an argument that with the investor activity involved, that stock, when it comes online, is becoming unaffordable. So I'm wondering from both of you, is it the completion target or the unaffordability? Is it this idea that if we didn't have enough supply, prices would go up anyway? Which animates you the most or really makes you argue for or against the investor role?
I think the algebra would tell me that it can't be blamed on any one group in particular, and I know John would agree with this, but I think, like, math would tell me that you could probably blame the largest group of buyers most substantially for the problem. And so if we look at the Bank of Canada's most recent novel approach to home buyers in Canada, first-time homebuyers are 50% of that population. And I understand that investors participate in exuberance, but they are also anchored to investment fundamentals as well. And so I think that they're the less likely the less likely buyer to be exuberant by comparison to someone who is a brand new participant to the market. So first things first, an investor is the smallest market participant after secondary home buyers, so upsizers or people buying a second home, and then first-time home buyers, which is 50%, according to the Bank of Canada. I don't know. John might have some better data on this, but and that investors are typically they've transacted more than once. They're probably experienced. They know how to price things. They typically price tethered to fundamentals. Now, there's speculators, and that's a whole category of its own, and we can get into that. But first-time home buyers, from my perspective, don't have those features. They've never transacted before. They're usually younger and therefore more likely statistically to work with a less experienced realtor. And we know what that looks like, at least on the Toronto real estate board. You know, with your average realtor doing like 1.6 deals per year, a first-time home buyer statistically likely to work with somebody who's maybe done one, if not zero, other deals that year. Are they more likely to overpay or to get wrapped up in exuberance just based on that? Probably. Then you have this sense of FOMO, the lack of participating in past market cycles, and the fact that they have a qualitative incentive to pay a little bit more, right? I can see myself raising my family here. This is the perfect home. This is my dream home. Like, you know, that element isn't present in the investor buyer. And so I think that all participants played an equal role in making the mess that we've created in Canada, but nobody likes to pick on first time buyers because it's a dick move, but I'm happy to, because I actually think that they are equally damaging to the market. And I think that we need to provide resources for them to participate in the market in a healthy way, not just demonize investors and try and blame them for the issues.
Okay,
Wow,
so
that's a new John. End users,
I'm
first-time buyers are driving up home
So
prices.
I mean, I have a lot to say. I mean, first of all, I mean, and I think Dan has misinterpreted some of the things. I do not blame investors for a housing crisis.
I know you
It's
don't. I
like
just like to jump in and
it
and,
it
and
is.
pretend that you do, but
I think, and I think people misunderstand me. Like someone called me for an interview, and like, do you blame? No, you cannot and blame investors for investing. Like to me, it's like the most idiotic argument. Like everyone wants to make some money. Everyone's going to invest. If you don't like the outcomes, it's probably public policy or something else. It's not the individual investor. So to me, that's not the case. But let's talk more about, like when I talk about this, it's more sort of the end product of having an investor dominated market, right? And I think I completely disagree with Dan. Like, I do not think first time buyers are even remotely on the same level as investors. And I'll give you two reasons why. For starters, first time buyers are truly constrained by income. Okay. The first time buyer doesn't have a ton of capital. They can only borrow based on their income, and they can only borrow at max 4.5 times their household income. And they're buying a home in a market where house prices are 10 times income, right? So there's a massive disconnect. They cannot leverage all of this income and debt because they're constrained by that. Whereas investors, and this is an important point, this is why over the past 10 years, the stress test and underwriting has not constrained investors. Investment shares has increased over the past 10 years, while first-time buyers has decreased. And the reason the share of investor purchases have increased is because investors are not constrained by income. They're buying by capital. They have savings. They have assets. So when they're getting a mortgage, they're not, yes, their income matters, but a lot less than their existing capital. This is how you can have a housing market where home prices are detached from incomes because they're fueled by capital, not income. And I think that's the first point. The second point is that investors are significantly more like, listen, first time buyers will get caught up into the FOMO in 2021 when rates went to zero. But investors are significantly more vulnerable to that. And the obvious case is our pre-construction condo market. A lot of people say, well, end users don't want to buy condos. It's not that they want to buy condos. Of course they want to buy condos. They used to buy condos 15 years ago. The difference that has happened is that in 2020, the gap between resale and pre-con increased to like between 30 and 50%. Right? So when we look at what a pre-con was selling for and what a resale existing unit was selling for across the street, the gap was huge. And the only person that could rationalize the irrational was the investor because they thought prices are going to go up forever. And collectively, as a society, we're kind of paying for the price for that because the condo market's frozen, home prices are through the roof, and construction has stopped because the bubble burst. So I don't agree that we can put equal emphasis on both. I do think an investor dominated market has resulted in everything that we're seeing today.
So on that point, Dan, most Canadians would say that the decoupling between the average times income and house prices, which has really accelerated in the last decade or more, is really due to this extra infusion of cash. And really just, common sense seems to make that apparent. This cash must have come from somewhere. What do you feel looking at the research?
Um, I mean, I think we probably agree that that's the case. I just think that that first time buyers are equally guilty of it, to be honest with you. And I think I'm of the opinion that this whole thing is it's excess liquidity issue, and it's really a central bank problem. That rates were too low for too long. And it's going to cause all investors to behave irrationally. So the way that your first time buyers were able to detach from the income cap that John's describing, not to say that all of them are doing this, but definitely a percentage of them were. CMHC's most recent mortgage consumer survey stated that 41% of first time buyers are using gifts or inheritance. So they're getting a down payment from the bank of mom and dad in most cases. Furthermore, if we talk about that investor behavior, 79% believe that homeownership is a good long-term financial investment, and 71% of them believe their home will increase in the next 12 months. So your first-time buyers also consider their homes an investment. They participate in that investment, and a lot of that is these are structural issues with Canada's economy because Canada doesn't have a ton of great places to invest. We suck at saving money. We suck at investing money. A home is a great thing for that. I'm perfectly guilty of that, and that's why I love real estate as an investment. And the final piece is that an increasing percentage of first-time buyers, and I'll get the exact percentage, are getting cosigns. So it's not just the bank of mom and dad lending them money or giving them money for the down payment, but they're actually co-signing on these mortgages, which is what breaks that income cap for first-time buyers now being able to participate and get a higher bid in the market. And the interesting part is when people refer to like investor ownership of real estate, they're often stating or using a data point from TerraNet, which is multi-property owners. And, it went from like in 2022, which I think was kind of peak, it was like 25% of all residential properties in Ontario were owned by multi-property owners. But out of those properties, over 53% are owned by those with only two properties in their portfolio. So in a lot of cases, that's either mom and dad owning a cottage and that's being called an investment, or that's mom and dad co-signing on their kids' mortgage and that's being called an investment because they're now a multi-property owner. And so I totally agree with what John is saying. I just don't think that investors are as much of an epitome of the case that he's describing as first-time buyers are. Like I think that the first-time buyers really are participating in the exact same behavior and probably causing the same negative externalities as a result.
But I mean, how can you say that the first time buyers did not fuel a pre-construction condo bubble? Like, is that the case you're making that like pre-con condos reached these insane levels because moms and dads with strollers were going out trying to buy a home of their own rather than the inflated expectations of investors? Like, because that's what it sounds like you're trying to say.
No, no, and I'm not. But the reason I don't actually care that much about so I'm not trying to say that, and I will not blame them for that. I'm talking about purely in the resale market because I think that they're trying to buy houses that they can move into on a closing day within the next 90 days. I don't think that they participated at all in the pre-con speculation. However, I do think that I think that was entirely a product of the free market that was too jacked up on cheap debt. And I actually think it was a good thing that it happened, that bubble took place. I mean, if you look at this pre-con condo bubble that you're describing, greater than 50% of these investors who are taking possession in the last 5 years are cash flow negative. If they're cash flow negative, that means that somebody can go and rent that unit for less than the cost of owning that unit. And that's just a cash flow negative on a monthly mortgage payment. That's setting aside the fact that that investor had to put a down payment down to take possession of that unit. So this is going to sound absolutely nuts, but this is legitimately what is taking place. This is like a socialization of housing where you've taken the burden of providing affordable housing, spread it across a bunch of idiot investors who actually think that these assets are going to go up in value. And because the incentives are so skewed and because they're lining up because they think that this thing is going to go from 1,000 to 1,400 a foot by the time they close or whatever it is, they now got caught by the free market and are actually providing affordable housing for or housing at below the market that they distorted in the way that you're describing through rental tenure. Is it a right way to deliver housing? No. Is it probably the only way that we were capable of delivering housing given the set of circumstances that we had in Canada over the last 5 years? I think so, honestly. Like I think it was a super necessary evil, and all of them are being punished. Like you gave me a timeline. I can't remember what the exact date was, but like 2010, 2015, things kind of went off the rails. That's when builders started to price in the future value of what they knew the buyers were expecting these condos to be worth on closing. If I'm a buyer in 2015 to 2022 and I'm paying $1,400 a foot for a condo that across the road from that site, I could buy a resale condo for $950 a foot. Yeah, the incentives are completely perverse, but I'm also making a really bad investment decision or a really bad speculation that produced housing. And the loss is absorbed by, like, we've quite literally socialized the losses among the whatever 600 pre-con buyers who lined up to lose money on this project. It got housing built, and the free market did a really good thing by punishing the individual. Same thing happened in the 1990s with the paper flipping and on the detached houses, and then the boomers learned that they hated real estate, and the market was healed for the next 20 years, right?
Let's put up a graph here to Dan's point, completions by house type. So we are focusing here on new pre-construction completions. And there in the orange, you do see the line for low rise. The activity, as you've mentioned, rising throughout the 90s, hitting a peak in 2000. And then we see the blue line, the condos taking over and completions staying at a pretty steady rate from about 10,000. It's now about 25,000 completion in the CMA Toronto metropolitan area. On the other hand, the construction of new homes has returned back to its 1990 levels, around 10,000. What do you say to this, John? Is this a case of investors going in and building this stock at the price that was required, a stock that otherwise wouldn't have come onto the market?
Listen, I mean, I think Dan's correct that given this set of circumstances, 100%, there is no other outcome. Like the outcome that we have is the outcome that is a result of the circumstances we had. The question is it good? Like, and I get Dan's point, the free market built the homes and those investors will get punished. I don't know if this is an optimal way, and I don't think it is. And I think this is kind of what I'm saying. I think, had the federal government through their CMHC programs that offer low interest debt for purpose-built rental housing, would we have seen more purpose-built rental housing and less speculation in housing? Probably yes. And I think that would have been a better outcome. So you don't need the investors to buy pre-con micro condos to build rental housing. And we're seeing that today. Purpose-built rental housing is through the roof, right? It's skyrocketing largely because our federal government has removed GST, HST on purpose-built rentals. They've offered low interest debt for purpose-built rental construction. So that sector's growing. I think that is a better outcome and probably would have been better if we had done that 10 years ago. But Dan's right. We didn't. So we're not kind of trying to change what happened. What happened? I think my point is it's not great. And even you can say those investors are getting punished, and of course they are. I don't think that's great either. Like, I think I feel bad for many of them. Many of them are not, and I think this is the problem. A lot of people hear all the investors, they think all the investors are just these asshole, greedy people, and they're not. Many of them are just the neighbors down the street who bought a condo for their kid and want to retire. It's not that they are these, and they're now all paying the price through this lack of knowledge. Many of them just heard the news, housing shortage, real estate is going to go off forever. And now they're paying the price. And again, socially, I don't think that's the best outcome. And I think, it's leading to these negative side effects. Now condos are frozen as a result of that. So,
And I'm going to push back a bit on both of you in a sense that this categorization of investors, who's an investor? The minute you turn into that second property, whether for your kid or something else, in the statistics, you are counted as the investor. And I would argue that that makes sense to count that as the investor because, in a sense, you are enriching your portfolio, and there's nothing wrong with that, based on gains. You're participating in the market in a way that end users never did. As somebody that's been a pure end user of my whole life, most people who work a salary job linked to some kind of credential degree don't stock up piles and piles of cash that
mhm.
they're able to then invest in other properties. It's usually those families that somehow had that real estate in some sector to then reinvest and help their children and do other things with. To Dan's point, it's because of the way the Canadian economy really favors that investment in real estate. So if I take that point, Dan, I want to push back a little bit on something that I don't think as an average Canadian feels, which is that investors have taken the brunt of this speculation to the level they should have. Many investors have made money off this market. I'm putting up a tweet here uh, where you say, even then, it could be argued some speculators created value. They lined up to take risks on pre-con projects to fund developers. Speculators got housing created and have likely given back all the surplus value they collected by having equity erased and having to pay out of pocket for negative cash flow. If you run the numbers on the cost of that, they give nearly as much value to the market as I'm being told they are costing the market in their speculation. So to say they're the primary cause of Canada's housing crisis cannot be really substantiated by the data. And here, Dan, I push back because I think the counter argument, especially from average Canadian end users, is that investment, speculation, even mom and pop getting excited and getting too involved, drove up housing prices way higher than they normally would have. Many of these investors did capture profits. So in fact, they profited off these gains. And yes, there are times of decline, but then we see a lot of lobbying and other things so that, the banks step in, make sure their pre-con is assessed at a higher value than it's really worth. Is there really proof that these speculators have helped, or have they actually just priced out end users that would have bought those units anyways? And yes, builders may have built fewer of them, but maybe they would have built them at affordable prices. What do you say to that?
That's a great question. So I think that there's a couple of like things to consider here. So the first one is that there's really no way to substantiate like whether or not like I would have to somebody would have to know the losses for all of these units. But I mean we've calculated like Ben Rabideau and I have spent a lot of time researching this. There's something like $13 billion in unrealized losses in the condo market right now, just in the pre-construction pipeline. So there's a lot of money. How much did people make in the same period of time since that detachment above, like where builders were capturing that surplus value from 2015 to 2022? I don't know, but I don't think that this surplus value is the investor's fault. I think the surplus value is the market's fault, and the market is a sum of a lot of the forces that are pushing that up. So why did rents go up? Well, the Bank of Canada in their Q1 monetary policy report put an exceptional chart that showed the correlation between rental price inflation and population growth, right? So non-permanent residents population growth and non-permanent residents not intending to stay here, they're not buying a house, they're going to rent. Rents went up, right? Investors are trying to capture that. Is that the investor's fault that rents went up? No. Is it their fault that the rents were higher than the mortgage that they're paying? No. Are they entitled to capture that based on the free market forces? Yes. And is it their fault that prices went up? Maybe a little bit, right? Like John and I are saying. Is it just as much first-time home buyers? Probably, right? Is it just as much the mom and dad who's co-signing the mortgages? Probably, right? So if we're going to blame individual actors for speculation, then we got to blame them all, right? And I think a really easy way to think about this is let's go to a market where there isn't like most of the Western world has seen declining homeownership rates, right? So Canada, the US, homeownership rates have been falling for the last little while. Go to communist countries. So China is a really good example. China is probably the best example because we've seen a lot of Chinese capital come into Canada. China's homeownership rate is like 99%. Okay. Who are the people buying the pre-construction Evergrande and Country Garden pre-construction condos and causing a condo bubble in China's market in 2014, 15, and 16 and 17. In 2017 or 16, Peter Routledge actually put out a report, who's now the head of OSFI, by the way. When he was an economist at National Bank, he did a Maclean's op-ed. It was on the cover of Maclean's called "China is buying Canada." And it explained how a lot of Chinese investors were coming, and they were completely unfazed by price increases in Vancouver of 30% year over year in 2016, because in Shenzhen in 2015 the prices went up 16 to 70%, and that's a market where homeownership is at 99%. And so these market forces aren't isolated to purely investor or markets that are driven by investors, right? They can happen in markets where it's purely a homeownership driven market.
Well,
Um,
Dan, I mean, I think there, when we talk about the market, let's talk about the government's role. When that bubbled out of control, the Chinese government stepped in last year to prevent all sales of the market, to try
yeah,
and control potential collapse. So when we say the market does have government intervention. The market is
yeah.
not acting freely, not in
I wouldn't call
Canada,
China a
and
free market by any means.
no, and it's not acting freely in Canada either, is it?
Well, I would agree. And I think actually like John's point about the purpose-built rentals is really interesting
Mhm.
because when a condo builder was previously building a condo building, they were doing it at the reason they would do it is because they could do it with like 5% total, 5 to 10% total equity in their capital stack. And the remainder of that equity required would come from these investors who were buying condos. They would submit deposits, those could be insured, and then they could become part of the capital stack. I could go get construction financing and I could fund my project. Now, CMHC through their MLI Select program has lowered the barrier to entry to a comparable amount for a developer who wants to build a purpose-built rental. So the question becomes, and this is just a question, I know where I lie on it, but would we rather the free market and investors and speculators being the ones taking the risk, or would we rather CMHC, who is now the key market participant that is behind that line of purpose-built rentals going up and basically backfilling all of that condo supply? It's the taxpayer now taking that risk. Has it changed the product at all? Absolutely not, because they're building smaller and smaller condos because they're going to build the smallest units that they can so they can hit that affordable rent criteria. Like I'm not incentivized to hit the affordable rent criteria by building a huge 2 bedroom unit and renting it below market because there's no um, criteria on the size of the unit that I build that's considered affordable in CMHC's MLI Select program. So I agree with you. We have government intervention. I guess my thought is, would we rather speculators be the ones that are exposed to the risk of what we're describing, or would we rather it be the taxpayer?
And before I take it to John, I would still push back and say we are not, speculators are not taking the full risk. When these units go to completion and the banks cannot appraise them, to your point, because it's a synergy in the whole system, they cannot appraise them at the values they really are. The banks start appraising them at higher values. We do end up backstopping even speculative behavior in Canada.
Well, I
Well,
don't know if the government does there. Like the lenders and the developers are the ones taking the risk there. And I mean that's between RBC and their shareholders. But like it's their
No, our banking, yeah, but our banking regulations, Dan, are a large part of why these banks are constrained, and we're underwriting a lot of their activities. I actually agree with you highly that we're an oligarchic, we're an economy where a few banks and a few major companies run Canada. There's no doubt about that. But they are all working together. I still push back on the free market idea, but
I don't disagree with
yeah,
that at all. I'm just saying like it's still not that's not the taxpayer that's taking the risk, right? Like those blanket appraisals are not being sold into CMHC insure or CMHC is not buying those and putting them
do we know for
into
sure that?
mortgage pools.
Because that,
Yeah, like I'm there's no way to verify it other than getting that information from CMHC. But I was talking to, I mean, like Ron and a couple other people in the space, and they said like those lenders always oversubscribe their CMHC So why would they waste it on stupid loans like that? And they don't need to buy the capital cost down on those
Because
loans.
those are
Like,
the crappiest loans. If I'm going to government insure any loan, I'm going to insure the dog crap that I know is going to likely default. Why would I
right? Yeah, that's a good point.
bulk insure the good loans?
That was my argument as well. Like I was
Like,
concerned that they were portfolio insuring or blanket insuring these
yeah.
through CMHC, but I just haven't been able to verify that.
So, I mean, just to unpack that before you ask my question, like for
Mhm.
people who, because we're getting in the weeds, people aren't going to know this. I think,
So in the weeds
yeah,
right
we're
now.
so in the weeds right now.
Okay,
So
let's lift up voice.
what we're talking about at a high level is this idea, the federal government increased the maximum limit on insured mortgages, whatever it was, a year ago or 2 years ago under Trudeau, from $1 million to 1.5. And some of the thinking was that one of the reasons they did this is that so banks could give these garbage mortgages to pre-construction investors. And when I say garbage, I mean, appraising them for way more than what they're worth, these blanket appraisals. And then banks could bulk insure them under CMHC so that the losses potentially are socialized, right? And no one knows for sure. CMHC doesn't open up their books. It's hard to get answers. I think that's probably what's happening, but we don't know for sure. So anyways, just to wrap that up.
I'm going to push back a little bit and take Dan's cause up here, because what my point here to Dan is more that I believe Canada, China, even the United States, all of these market models they're all on a continuum from a free market. None of them are free market entirely. There
No.
are
I agree with
government
that.
interventions of all kinds, right? And we see that
Mhm.
around the world. Now, having said that, I do wonder, John, some of your examples about other ways to do things, where we look at European countries where the governments have really been involved with housing for a long
Mhm.
time.
Mhm.
It is so counter to what we've done in Canada.
Mhm.
We know your own piece shows the Canadian government doesn't want to be involved in housing.
Mhm.
So, what is wrong with trying to use investment money, but being better government regulators in shaping it the way we want it to go? For example, there was a time 10 years ago in Australia where they decided, listen, we're not going to have enough single family homes. We have tremendous investment interest from China. So, for our population growth, we will limit these in the Chinese investment money, or they didn't call it Chinese investment, foreign buyer money, to only resale homes. Sorry, only new construction homes,
Mhm.
i.e., they could only, for example, come in and start to take um, responsibility for building this stock. But presumably, when all this stock was in place, as Australians came of age, they would be able to move into those properties. What do you think, John, about trying to use investment and guide it better to build the kind of stock that we want?
I mean, yes and no. That example I feel like is a terrible one. Like, because at the end of the day, I mean, with all due respect to Australia's vision, if the goal is, again, you're having investors buy homes that are intended to be owner occupied, we saw what happens. We saw it. We have a condo crisis. Condo prices went through the roof. And again, it wasn't fueled by moms and dads with strollers. It was fueled by investment activity because investors are more optimistic. So I don't think that is a solution. Like, of course, you want investment capital. You want it to funnel into the housing you want. I mean, I tend to disagree with Dan. I think it's better to have it funneled through government-backed programs like CMHC's MLI Select because the investors are sophisticated. Okay, they know what they're doing. They're going to be, and I don't think they're all building small units. Many of them are building larger units because that's actually what's renting better right now. So I think it is a better approach than depending on mom and pop investors buying end user homes. I think it's a terrible approach. At the end of the day, uh, especially for low-rise homes, do families want to buy low-rise homes? And the answer is, of course they do. So why do you need investors outbidding them? I mean, it's just irrational.
And John, to help our listeners and viewers understand, when you're saying that there's certain programs that attract the most sophisticated investor
Yeah.
rather than the mom and pop, can you unpack
Well,
that?
so the program that Dan's talking about, so CMHC has programs geared towards builders. So when we talk about investor, these are builders who build new housing, who are building long-term, permanent, purpose-built rental housing. So these programs, yes, those investors, that's a very big difference. I mean, we're talking about two different types of investors, the investors who build homes versus the investors who just go out and buy existing units. Very different. So yes, programs that are for institutional investors who are buying per building permanent rental housing, completely different, far more stable. And I think it's a better approach. I mean, listen, and it's hard to compare Canada. I mean, circling back to Dan's point, homeownerships are declining around the world because investors' purchases are outpacing end users. Like that's just the reality. That's what's happening in Canada. It's happening in Australia. It's happening in the US. It's happening in a lot of countries. You either think that is a good vision, that more of the homes that were built for owner occupiers should be in the wealthy person's portfolio, or you don't. And I think that's a wrong vision for Canada. And I don't think 100% home ownership is the utopia. China's statistics cannot be relied upon. At the end of the day, most of their citizens are buying investment properties. So they're either not counting those as rentals or not counting them as sitting empty. Like something is going on that is not normal, right? So, and yeah, I don't think that's the utopia. I think you need a balance between strong rental housing and home ownership.
Dan, is that a point of agreement? It seems like that addresses your concern about the unsophisticated investor, which quite frankly, every other Canadian has become over the last decade, right? Who's not an investor here now. Do better government programs like this offer controls against that, unsophisticated investor coming in versus institutional investors?
In theory, yes. In practice, I mean, it's up for debate. I was just glad that John called investors sophisticated. I was happy about that one. But I mean, look, like the problem is like we're in like the third year of this CMHC MLI Select program, maybe fourth. I don't know. We've been talking about it for a while on our podcast when it was a good investment 2 years ago. When I mean, CMHC MLI Select quite literally only makes sense if property values are going up and rents are going up. Neither of those things are happening in most markets in Canada right now. And so the issue is that you've got all of these pre-con speculators, the ones who haven't been sufficiently bankrupted by the Toronto condo collapse yet, are piling into these Alberta CMHC MLI Select deals. And they're basically doing the exact same thing. They're using the enticement to buy it is the fact that it's a 5% down deal. And now CMHC's changed this. They have this thing called the rental achievement holdback, and you need a 25% cash position against the loan. So it's not actually 5% down during the construction period. Because they're trying to dissuade these speculators from overbuilding markets like Edmonton, Alberta, and the same thing happened in Calgary last year, by the way. 2024, you go to Calgary in 2023, all these Toronto pre-con speculators were piling into these CMHC MLI Select multifamily deals. Your brand new vacancy rates on multifamily product in Calgary jumped from, so they were underwriting these deals at 2% vacancy rate. And by the time they closed, they were closing on the projects at a 7% vacancy rate. And so they're all getting smoked on vacancy. And the rental achievement holdback was designed to basically right size the loan for people who can't hit their pro forma rents, like the rents that they applied on the submission that they gave to CMHC. Edmonton's going to be the same story in 12 months. And so I would say I love the fact that John called investors sophisticated, but they're not the ones doing this from my perspective.
No, I mean,
honestly.
but are these the institutional investors, right? Are these
a lot of institutional investors are doing CMHC MLI Select deals.
Yes.
They're not doing the ones that we're talking about that's sort of
at
like
the
accessible
risk
to
level.
retail.
Exactly. So we just see the speculator or whoever, investor kind of shifting from the condo market now into this market. And yes, they're causing
your retail investor.
Yes.
Yeah, like your retail, let's call it a speculator, right? Like people who are really buying that their model doesn't work if values aren't going up. Right. That's a speculator from my perspective. An investor is buying for yield, long-term value creation. They understand that an amortization schedule means that my asset will pay itself off faster the longer that I own it. And that's a real estate investor from my perspective. A speculator is somebody who needs an exit or needs the value of the property to go up in order to make their investment make sense. They're trading.
Is this a point of agreement that we're all reaching? Because one of the models that
I think John and I agree on this.
No, but I'm excited to hear this because I think when we look at some of the European models, we should know that Switzerland has a cap on how much a landlord can make in rent every year. Singapore, all kinds of entities that are pointed to have caps on how much you can make. Real estate's still in a good investment if you hold it for the long term. I don't think people are really blaming people who own units, rent them out over time. right? Whether that's institutional or mom and pop investor. So are we now zeroing in on the real problem? It's that people made money fast. There was a type of
Well,
investment in Canada that we got addicted to.
Well, I think that's just a central bank issue, right? Like if your M2 money supply is growing at the rate that it was, you chart Canadian house prices beside M2 and it's like pretty clear what's happening, right? Like, and so from my perspective, yeah, people, too many people made too much money too fast in all kinds of things. Real estate was among them. So was, whatever fart coin and, like all these other random, GameStop stocks, right? Like it's not just real estate. There was an everything bubble because there was way too much money pumped into the economy, and we're just still dealing with the problem of it because it's a long run supply pipeline, and it's a less liquid market. We're still dealing with the consequences today of the 2021 2022 monetary policy decisions where all of those problems already came out in the wash with your meme coins and GameStops and everything else of the world because they're more liquid markets, right?
John, real estate's just like everything else.
I mean, listen, I think the challenge that certainly people flooded a ton of capital. And again, I think the reason I focus a bit on investors, again, I focus on investors who are just buying houses and condos. I'm not focusing on people who build homes. And I think this is a big disconnect. The investor who's going out and buying low-rise homes in the suburbs, okay, is basically rent seeking. These are not productive investments. They extract value, they shut end users out of the market versus the investor who's going out and buying the bungalow to build a fourplex or a sixplex is creating value. And I think this is one of the problems I have with all of the approach to investing in Canada is just buy a house and sit on it and speculate on land going up. And I don't think this is something government should encourage or incentivize. I think we should be having more incentives to building housing. And I think this is kind of one of the challenges that I have with Canada's approach to, real estate investing, which is just basically sitting on properties.
I just think it's a really slippery policy slope. Like I'm of the opinion that the free market has dealt with those individuals pretty well. Like anybody who bought a freehold house in the last 5 years to rent it out is cash flow negative anywhere in the country. There's like two markets in the country where you wouldn't be cash flow negative if you bought since the beginning of COVID.
Mm-hmm.
So they're losing money and and in hopes that it'll eventually go up in value. And the problem is if we regulate them out of the market, and CMHC already did this, by the way, for at scale, like you cannot build a subdivision and get CMHC MLI Select on it. The units now have to be connected, like they have to be a plex. Okay. So now we're basically saying we're regulating institutional investment to multifamily housing. Well, what happens if somebody doesn't want to own a house, right? And to go back to like, is this the right direction? I would argue, I mean, Adam Smith's Wealth of Nations, one of the best economic texts ever written, argues that through specialization and division of labor, we can create extra wealth in an economy, right? And institutional landlordism is a specialization of labor, right? It's that you're taking the burden of homeownership, which otherwise we have all of these first-time buyers going and buying all this old housing stock with deferred maintenance and dealing with all of these issues, or they can go rent something for less money that's beautiful and brand new. Why should they be limited to that being an apartment? Because we don't think that that investors should be able to own ground-based housing.
And listen, I think if an investor wants to build ground-based housing, all the power to them. Do I think listen, our country's entire housing market, our entire welfare state, which is to say how our government views Canadians being able to manage themselves into retirement, has been anchored by this assumption of home ownership being our biggest long-term retirement investment. So if you want to throw that in the garbage and say, well, no, we don't need the next generation to own their own homes. Let's just pool a bunch of capital and buy them as institutional investments. You're changing structurally how housing works in Canada. And listen, some people think that's an amazing vision. I don't. I just think we should be encouraging home ownership. We should not be selling off, and this is Canada's vision, our low-rise homes to investors, whether they're smaller investors who own four or five, or larger institutional investors. I don't think that is a very good vision for Canada. This is why people are leaving, quite frankly.
But no, but that, but
That's why
like
people are
there,
leaving. So,
but the economics of low rise. Okay, so like I'm of the opinion, just to like to answer and kind of make it clear here, I am of the opinion that it's like that we should get away from homeownership, and that's a big problem with like that's kind of the core of why we've ended up here, is because we haven't encouraged Canadians to actually build wealth outside of paying their mortgage and investing in the hard asset of their house, right? Like, and so you go to some economies that have lower home ownership rates, where the wealthiest people, or maybe not the wealthiest, but like a lot of people who have upward mobility, go to Wall Street as an example. All the investment bankers rent their properties because they are better capital allocators than the 5% or whatever they're going to get as an annual return on home ownership. And so we shouldn't eliminate the ability. We should at least have a system that equally encourages the ability for people to go and invest in things like building their own businesses, investing in companies that they believe in, all of those things. Otherwise, our economy quite literally is a purely housing economy, right? And people are just going out there earning their wages to pay into their houses so that they can use their houses as their retirement later. I mean, it's just a very backward system, and it doesn't encourage any economic growth because all of your income is getting pumped back into your residence. And
no,
and, and that shows in Canada's GDP,
no,
right?
no.
Like look at
I
the
disagree with you. We're not here because Canada promoted home ownership, okay? Because we've had home ownership privatization for decades. We got here because Canada promoted homes as get rich quick schemes. So people were taking their money in their holding companies rather than investing in their business. They're parking them in houses. It's not the
But that's
home.
because there's an unlimited pipeline of the buyers that you described that need the home. Like, I mean, it's the perfect trade, right? Like, I know that I'm gonna have some greater fool at the end who's gonna be a first time home buyer who's brand new with a shit realtor, that all those things that I described earlier. I mean, that thesis depends on a new entrant being there in the market willing to pay more than I
No,
paid for
they're
the
not
house.
greater fools, because the person who's buying a home is doing it because they want security of tenure. I don't want to go rent your townhome for my family, knowing that you can kick me out whenever you want, knowing that you can increase my rent 15% per year if you want to evict me because it's not rent controlled. That's not a vision. Okay. This is like a vision for people who want to capitalize on housing. I don't think it's a vision for Canada, but it is Canada's vision to sell off our homes and to jam people in non-rent controlled houses so landlords can jack up the rent as much as they want. I don't think it's a vision. The countries that prioritize rental, to be clear, that you mentioned in Europe, have a strong market for non-market rental and for market rental that is rent controlled. They prioritize security of tenure. Ontario doesn't do that.
I would also
Well,
argue that Wall Street and Germany are two different examples. CEOs in Germany make only a couple multiples of their employees. We see that completely untethered in the United States. And I saw a paper that says the number one thing a lot of even money managers do wrong is their real estate moves, because they are also swayed by, renting out the best penthouse for 50 million a month to attract the wife who cares, whatever. So I want to just take that observation to say, are we missing something here? I get your point, Dan, that all things considered, we should all work to the best of our ability and trade what we can't do well. But aren't houses different? Our hierarchy as human beings is shelter, food, clothing, right?
yeah, but so
But to
then I mean,
treat housing as just this interchangeable good, is that not the crux of the problem that you're
well,
advocating here?
well, I maybe it is the crux of the problem, but I think that it's super dynamic, right? Like what you're describing, like ground-based housing, like subdivisions, people owning that at scale, like that's not really taking place, like because the
It,
economics of it don't
it is
work.
taking
And
place. Like there's just
no,
a report.
I can't go get CMHC MLI Select on a subdivision of detached houses. This is what we were talking about originally. Townhouses, sure, right?
So you're talking
Or
about
but
building new low-rise purpose-built rental. That's different. I'm talking about people buying existing low-rise homes.
But okay, but what's really wrong with that? I mean, really, because should tenants not be allowed to go get a detached house that they can rent from? Like, and if I'm a multi-property owner, like if I'm an institutional landlord, I can't evict people in a large portfolio for own use.
No, not for own use, but you can listen, you can jack up the rent if you bought a property that's,
I
a
think
newer
renoviction,
build.
I think that's
But
been
again,
tested.
I think it goes down to what is Canada's vision for the role that houses play in our society. And we have two different visions. I think it is a better vision where when we were 20 years ago, where homes were owned by the many, they were shelter for families and a long-term retirement investment for them. The vision that you're putting out forward is that whoever wants to buy them, the strongest survive. If I want to put them in my portfolio and use them as rental properties, then that's fine. But again, I think the problem is you're shutting a generation out of home ownership, and Canada doesn't have a solution for that. Everyone keeps, talking about supply, 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 which is a BS narrative in the context of an environment where investor ownership is outpacing end users. So I think we just have
I,
different visions.
but John, I disagree. I think Canada does have a vision for those owners, those new generations. It's that they become permanent renters,
Well,
including
yeah,
of low-rise
in
homes.
apartment buildings.
in
No,
apartment buildings or non-market.
but including low-rise homes. Because Dan, one thing I don't understand is what is the financial productivity benefit to Canada of investors buying over existing housing stock of low-rise homes? Are you telling me that they have developed a skill of being a homeowner better than an
Yeah, I
individual
do think I
homeowner? Is that
absolutely. I
their
think there's a hundred
really?
percent. If you're telling me a first time home buyer should be able to take possession of a or that's the right thing for somebody to do when they're a new entrant in the career trying to climb the ladder, and that they should be coming home every day fixing the random crap that's going on with their old house, mowing their lawn, blah blah blah. I mean, that's not a good use of someone's time. Like really,
But
honestly, that they
But you
can get a
do
better.
realize, Dan,
they
that
think
Adam
it
Smith,
is.
but let's
Right,
go back
but
to
they're
classical
wrong, right?
economics. What you're saying is revolutionary because at the base of Adam Smith and all these classical economists was one thought: ownership of certain property as being the means of an individual's engine and ability to participate in society. They differ on how much we should own, but there is no classical economist that would say not owning property is the key to a more generative economy. They didn't go that far. I mean, we're
Well,
always talking about communism at that point.
now, a lot of those thoughts existed prior to things like land transfer tax, property tax, and income tax, right? I mean, you have
No,
to
but I'm just saying the
remember, but
classical
Like,
economics
yeah,
of
but
Adam
it's
Smith,
a
that
very
like this is
different.
okay,
very
but
revolutionary.
I mean, and I mentioned this in my report. Frederick Hayek, who is a very conservative economist, argued that private property is the biggest guarantee of freedom. Okay. And, his concern was what happens when home ownership gets too centralized by one entity, the state. What we're going towards is a move towards home ownership being centralized by the many, the wealthier, rather than the middle class households. And I think,
Well,
again, this impacts the next generation's freedom.
I think that you're almost centralizing it. Like if the government is providing, or if all of these people are buying, like the next generation of institutional ownership that we've it sounds like we agree on is coming through the CMHC MLI Select program, that can only work with a government, basically government subsidy, realistically, like where, because you're getting a 50-year amortization, so you're basically taking an investment that would never work on any other credit terms that the private market would ever be willing to offer you, because and it's so bad that you have to spread it out over 50 years to make the numbers work. That's the government subsidizing or providing. And so to me, you are almost centralizing it now. It's now becoming a state thing where CMHC is functionally getting all of this housing created, and for at least the next 50 years, they're the one that's making this deal make sense for the investor.
Okay, I mean, I'm going to wrap up with one thought because I know we're running to the end. What we're talking about two different things. You're talking about centralized ownership and control of permanent rental housing, which has always been centralized under institutions. I'm largely referring to homes that were built and intended to be owner occupied, but now are not, which is why our home ownership rate's declining. So yes, permanent rental housing is going to be owned by institutions and the government will finance it, but that's very different from end user type housing. And I'll leave it there.
Yeah, well, but final thought to Dan. I really
Okay.
want to give Dan credit because I think what Dan's introducing is more revolutionary that we're thinking about. Listen, some of us being renters and maybe investing in other things. I'm not opposed to that. I think my question, Dan, to you, my final question is, it is so the antithesis of how we function in North America. Realistically, do you really see this happening without it being to the detriment of the average Canadian? It just seems to me that way too many people, whether the state or an institution, just can come in and take advantage if we are all renters.
Um, Only if we can't work together on building an economy that exists outside of housing. I mean, as it stands, Canada sucks at doing that. Like our economy is very much dependent on housing, and so we are all parts. We're little gears in the machine that keep that thing running right now by paying our mortgages, getting excited about it, buying pre-cons, paying our rent, blah blah blah. Right? You go to a place that's productive like the U.S. or China, and they have vast economies outside of housing, right? And I mean, the Chinese government and their brand of communism don't believe that the home is a productive asset, right? Um, it-
And yet
we
they
need
have
to.
housing boom and bust, it must say. We
Oh
must
yeah,
say
for
that
sure. Like
take down the world.
for
So
sure.
they're not immune to the magical thing that is real estate, right?
Yeah, I think we just like to me the whole thing is we need to diversify our economy outside of housing, and an easy way to do that is to get institutions to be the ones who are owning houses for the people who realize that they can be far more productive in the economy if they don't have to worry about the burden of homeownership.
All right. Revolution. Revolution. I think we just maybe end there. I want this to be a part one though.
Yeah, I like a little to be continued on
Beautiful,
this one for
beautiful.
sure. There's a lot. I feel like John and I have a lot more to
We
say.
do.
Yes. I have to applaud Dan. Like you're bringing some fire. You're bringing some like and don't get me wrong. I think there's a lot to unpack there. It's just it's a very, very unique proposal for North America.
Awesome. Well, thanks for taking the time, Dan, to join us. And
My
it
pleasure.
took us a year to set this up, but I'm glad we finally set up our chat.
Yeah, me too.
All right.
100%.
Till
Well,
next
thanks.
time.
Part one of part two coming up. Thank you to all our viewers and listeners. Please respond to what you've heard and what you've seen today. You can just comment on our YouTube channel or email us at, what's our show email, John?
They can email me. Ask John at movesmartly.com.
We have a couple. Sorry, I just blanked on that. You can also follow John and Dan on X Twitter. Dan, your handle?
Daniel_Foch.
And John?
John Pasalis.
Okay, and that will be in the show notes again. John, Dan, I really enjoyed this. Let's do it again.
Till next time.
Thanks.